Hello, students. In
Good
the
afternoon, ma'am.
Yeah, good afternoon. In the previous class, we discussed about the income from house property. So we are moving to the next topic, which is a part of block one only. That is profits and gains of business or profession. So in the first, when we spoke about the different five sources of income, in that this is the third one, where already we discussed about income from salary and income from house property. Now we move to the income from business and profession. So whenever an individual or person or an SSC is doing business, if you remember your profit and loss account, where we'll try to find out whether the business has earned profits or losses. And if you even remembered your profit and loss account, it will be like a T-shaped thing, T-shaped form account, debit and credit. In profit and loss account, we write on the credit side an incomes, and on the debit side, we write all expenses and losses. And credit side, we write all incomes and gains. So when we are doing this profit and loss account, we write all the expenses and losses of the business on debit side and all the incomes and gains on the or profits on the credit side. So here we write expenses like salaries, electricity bill, postage, telegram, telephone, depreciation, interest on drawings, interest on capital, commission, interest on loan taken, insurance, like this, so and so forth. We write n number of expenses and losses on the debit side. And on the credit side, we write uh, interest on bank deposits, dividends received, interest on investments. Like this, we write incomes or gains on the credit side. And the whatever difference we get, we call it as profit. Now, then why again we are calculating income from business? Because whenever, as a in the perspective of business, owner of that business, I always tend to earn more profits, but always tries to pay less tax or no tax to the government. So in order to escape or to minimize my tax, as a business person, I will include all those expenses and incomes which are not related to the business, such as drawings, means interest on capital. Normally, an owner invests into the business, but as per business entity concept, business is different, owner is different. But what are we doing? We are clubbing together and writing that salary to the proprietor. Do really any owner of that particular business, if you take small example of any stationery shop or any textile shop, do he take any salary from that account or from that account? No, it's not. It's only for namesake. What he'll do, he'll try to add all those expenses and losses which are related to both business as well as which are not related to business also or written together. So as an income tax person or as a when I'm paying tax as a business person, I should make sure, because as a business person, I always try to show less profits so that I can escape from the tax liability. So in this case, I cannot, the income tax department will not allow me to pay tax whatever I show that is my income. So in order to make it authenticated, every business person has to get its accounts audited by the practitioner chartered accountant. When he gives a certificate, then he is able to pay that. Okay, then it is authenticated. He can go as per the tax payment. So now here we try to learn how to differentiate that, because as a business person I will try to show less profits, but as income tax department I should know whether he has done right or not. So for that we have a format where we try to add back all those expenses which are not business expenses, and we try to deduct those incomes which are actually our not incomes. That incomes will be deducted, and expenses which are not business activities, that will be added back. So let's look at the format. So this is the format how we calculate the income from business. So here, if you just look at here, balance as per profit and loss account means here already the business owner will share with us what is his profit and loss account. So what we will do, whatever final accounts or statements he shared with us, we'll just cross verify. We start our solution with profit and loss, and whatever balance comes in that profit and loss account, like we get net profit. Yes. So we start with that net profit. Already it will be given. So we'll just segregate business and non-business. We take only into the consideration, we take only business expenses or business incomes. Others will be removed. How do we remove? See, actually, what I said, uh, to gain this, to attain this net profit, the business person has added, written all expenses like two salaries, and also has written two telephone expenses, two commission, two rent, two donations, like this, so and so forth. They'll write all the expenses, and also similarly they write the income. The difference will be net profit or net loss. Now when we are taking and trying to find out what is the income from business that particular business person has earned, to get that correct income we try to start reverse. We go with the reverse. We go with this net profit, will start it. So we write balance as per profit and loss account like this here. Right, balance as per profit and loss account means this is the balance what we have got here in the profit and loss account. This net profit is taken as your starting point. And to this, actually to get this, what we have did, we deducted from income, we deducted these expenses. But look at these expenses. Do all these expenses are business expenses? We just look at here, okay, salaries is paid to the employees, so it's a business expenditure. Telephone expenses, because we have an office where we get calls and receipts, so this is also business expenditure. Commission we pay to the employees. Rent, if our business is in a rented or building or commercial complex where we are paying rent, then it is a business expenditure. If you look at your donation, donation is not a business expenditure. It is his personal interest, whether out of whatever his beliefs or whatever his perception, he may do that, but it is not a business expenditure. Even we pay some donations during some occasions, or we do some charity. Yes, so this is not my business is doing the business activity, maybe manufacturing business or selling or purchasing something, but donation is not my business. So The business person has included this as an expenditure. Now we will remove it. What we did, we have shown here it is an expenditure. But is it really an expenditure? No, it's not an expenditure. But earlier what they did, they have deducted. Now we get to get the correct profit, we add back. We add back. So we add back all those expenses which are not related to the business. And the expenses which are not related to the business are called inadmissible expenses. They're called inadmissible expenses. Means the expenses which are not allowed. Actually, they are not a business expenditures. But the business person has shown it as a business expenditure. Now what we do? We rectify it by adding those expenses. And these expenses are called inadmissible expenses. So we are adding inadmissible expenses. Under that, they have given few points to us. But apart from this, we have n number of expenses which may come based on the problem, like income tax paid. This is paid by an individual or by the or but it is not a business expenditure. Charity and donation. This all personal interest. Household expenses means I'm taking any amount from the business, or for example, I'm using the servant or the attendant or peon who is working in the office. I'm taking them to the my house also, and I'm whatever whatever the salary I'm paying from my business. But he's working for both office as well as house. So whatever the expenses, whatever the amount he has taken from the business for his personal purpose, that is not a business expenditure. Loss on sale of motor car and other assets. See, you may sell any assets of the business, but when you sell, it is not a business expenditure. Whether you got loss, if it is not, why? Because our business is not selling motor car. Our business is manufacturing some products or selling some products. But whenever we are selling some asset, if we get any loss, that is not a business expenditure. Similarly, if you are purchasing any assets, life insurance premium of proprietor, because he's a person, owner, his own interest, it is not a business expenditure. Interest on capital, provision for bad debts, salary to proprietor, fines and penalties, staff welfare fund, gifts and presents to relatives, friends, etc., and contribution to unrecognized provident fund. These all are not the business expenditure. So if you found these expenses in the question given to you in the profit and loss account of that particular problem, you have to add back. Now, from that we deduct expenses not charged to profit and loss account. Means there are some expenses which maybe may not have been charged. We have not written in profit and loss account. Actually, they should be written, but we forgot to write or we tend to forgot. So in that case, whatever expenses which are not, means here we have not written in profit and loss account. If it was not written earlier, that will be here written here, because all expenses now expenses will be deducted. Now comes the non-business income. Incomes which are not related to the business, like rent received. I'm not doing any, like rent received comes under income from house property. Yes. So this is not a business income. Next, interest from bank. Interest from means you are saving, it will not come under because my business is not depositing amount and only leaving on the whatever interest I'm receiving on that account. No, it's not like that. Next, dividend received. If you are purchased any shares, or if you have invested in any of the shares, then in that case, whatever profit you are receiving, it is your dividend. That is not your business. Next, refund of income tax and business income. So these all non-business incomes. Actually, we have earlier taken it as an income. Now we are removing it. So this is when you add deduct all this together, the difference is nothing but the business income. This is how we will calculate the income from business. Now, apart from this, we have some more points which you should understand while before going to do some one problem. If you just look at here, yeah. Expenses expressly disallowed. See, if you just look at, you just remember these points. This is the format. Inadmissible expenses means it's very clear that they are not related to the business. And non-business, these are expenses not related, and these are income which are not related to the business. That way, expenses will be added back, incomes will be deducted. And whatever expenses that are not written in the profit and loss account, now they will be written back. Now, if you just look at here, there are certain expenses. Actually, they are business expenditures only. They are business expenses only, but they are not allowed as business expenditure. They are treated as inadmissible expenses. Though they are business expenses, but they are treated as inadmissible expenses. So let us understand what is the reason behind that. Though they are business expenditures, but they are still treated as inadmissible expenses. First one is advertisement expenses. Advertisement expenses. Advertisement expenses are business expenditures only. But when that advertisement is published in any of the political related magazine or political related pamphlets or any political related books or souvenirs, in that case, it becomes inadmissible expenses. So if it is given in the question only advertisement expenses, nothing is mentioned, then we won't touch it all. Why? Because the business expenditure, it will not come in our format. But when it is mentioned that this advertisement expense are published in some political pamphlet, then it will become disallowed expenditure. Now, next one, interest, royalty, fees for technical services paid outside India and without tax has been paid or without tax deducted source also will be treated as disallowed expenditure. Similarly, with that of income tax, wealth tax, this we have studied, na, just now income tax, areas of income tax, advance income tax, this all comes under disallowed expenses. Wealth tax paid, wealth tax of an SSE. SSE is an individual. Owner is different, business is different. The person who started business is different as per business entity concept and owner. So whenever any wealth tax paid by an SSE, it is a disallowed expenditure. And salary, anything paid outside India or payment of provident fund of employees paid outside India without deducting any tax, any TDS. Next, any perquisites paid by employer or any tax on perquisites and provision for gratuity. And apart from this, we have some more expenses like capital expenditure types of any provision. If you take any provision, provision for bad debts, provision for doubtful debts, any provision or any reserve or any funds, reserve for bad debts, we call reserve for any debts, any provision or any reserve or funds are inadmissible expenses. These all are inadmissible expenses. Like salary of rent, this is not salary of rent, this is salary of proprietor. Next, drawings of proprietor, personal expenses of proprietor, fines and penalties, income tax, wealth tax, or any other taxes of personal nature, charities and donations, losses and provisions, amount paid to remove competitor, registration expense of business assets, legal expenses relating to capital assets. This you have to remember. Next, gifts made on personal consideration, expenditure on raising capital. So these all are the expenses. If they found in the profit and loss account, these all are inadmissible expenses. All are inadmissible expenses. Now, apart from this, we have some more thing that are general deductions. Like these all expenses are deductible. Like advertisement expense are business expenditure, but when they are given in the political party journal or anywhere, it will become a disallowed expenditure. These are few points given where these are business expenditures. Now, apart from this, we have one more disallowed expenditure, which is called as depreciation. Depreciation. Actually, depreciation is a business expenditure only. But why we are taking it as inadmissible expenditure? Because depreciation, each business or each type of industry will follow different percentage of depreciation percentage. So in that case, to have uniformity, one business is following 20% of depreciation, the other business is following 10%. So different business are following their own rate of depreciations while calculating on the assets. In order to have uniformity, the IT department has given certain rates of tax, depreciation rates, whatever the business person may follow it, but while auditing, that it should be checked that they have to follow the rate of depreciation given by the income tax department only. So in that case, what happens? Whatever depreciation given in the profit and loss account will become inadmissible expenditure, and the depreciation given by the IT department will become expenses not charged to profit and loss account. So in relation to that only, these are the different rates of depreciation given here. So these are the different rates. You can just look at here. And here we call it as a block of assets. The term, if you can look at here, it's a block of assets. So rate of depreciation is sometimes this will come for the short also, block of assets. Block of assets means a group of assets which all fall under same rate of interest. Sorry, same rate of depreciation or same percentage. For example, machinery, plant and furniture, if they all are having 10% of rate, means different assets coming under together, as they follow, they have the same, they attract the same rate of depreciation. That is called block of assets. And for example, some assets may have 10%, the other assets may have 5%, the other, some more assets will have 20%. So each rate of that assets group, we call it as block of assets. And you can just look at here, these are the different rates of depreciation given. So whatever they may give, but this we have to calculate. Whatever the business person may follow as per his own interest. But whenever he's going to pay the income tax to the tax to the income tax department, in that case, these rates only will be taken into consideration. So we'll try to look at one problem so that you will understand uh, how actually income from business is calculated. Yeah. You can just look at here. Given below is the profit, like this, it will be given in the exam. Given below is the profit and loss account of Mr. X for the year ended 31st March 2019. Actually, this will not be the 2019, it will be 2020 only. It's old version, so given like this, not a big issue. So this is a profit and loss account given to us. On the debit side, you have salaries, bad debts, provision for bad debts, insurance, advertising, interest on capital, interest on loan, depreciation, net profit, gross profit, discount, commission, bad debts recovered by rent receipt. So on the debit side, we have expenses and losses, and on the credit side, we have incomes and gains. Now, note, allowable depreciation as per IT rules is 30,000. If you just look at here, already there is a depreciation in the profit and loss account, that is 25,000. So this is the depreciation calculated by the business person. But this is the depreciation actually to be charged by, uh, actually this is the depreciation they have to follow. But what he's doing, he has taken only 25,000. But according to income tax department, it is 30,000. So in that case, what happens? Whatever depreciation given here will become inadmissible expenditure. It will become inadmissible expenditure, and the depreciation whatever given here will become expenses not charged to profit and loss account. Next, insurance includes life insurance premium of the proprietor. You just look at here given only insurance. If only it is given insurance, we will think, okay, this is insurance taken by the business person for the business activity or some business goods. But what he mentioned here clearly in the down, insurance includes life, so it is not a business expenditure. Here, 2000 is of proprietor is taking his own life insurance. So, life insurance of an individual is a personal expenditure. But he added here. So, we will, what it will become, that 2000 will become an inadmissible expenditure. So, what we'll do, we'll do a problem just. So, it will start like this. Balance as per profit and loss account. If you just look at here, balance as per profit and loss account, here it is given 3,56,000. It is 3,56,000. Is it right? Balance as per profit and loss account, 3,56,000. Now, to this, we will add, as per the format only we have to put, add inadmissible expenses. Inadmissible expenses. Now, in this inadmissible expenses, we should be able to identify them. Look at here, salaries is a business expenditure, so it will not come. Yes. Now, bad debts, provision. What I said, any provision is a inadmissible expenditure. So provision for bad debts. Insurance also. Why? Because we just look at here insurance in that LIC, that is life insurance premium of owner is there. How much it is there? 2000. So in this insurance, 2000 is inadmissible expenditure. Now advertising, they did not mention anything. So it's a business expenditure. In other case, if they mentioned in the note that advertisement expenses were included when it was published in pamphlet of some political party, in that case, it will become inadmissible expenditure. So we write here under inadmissible expenses, we write first one, that is provision for bad debts. And similarly, insurance also provision for bad debts 15,000, insurance 2,000, because this is paid by the owner, LIC. So LIC of proprietor. 2000 only we will write. Next, interest on capital. Interest on capital is also inadmissible expenditure. Why? Because in reality, the owner will not take any interest from the business what he had started. Okay. So this is also becomes an inadmissible expenses. Interest on. Now the depreciation. Why? Because depreciation given in profit and loss account, depreciation given in the note also. So whenever it is given like this depreciation given in the profit and loss account will become inadmissible expenditure. So interest on capital and depreciation. Now we will add all these things. You can just look at the same they have given here also. You can just find out. Okay, the same things. Provision for bad debts 15,000, life insurance premium 2,000, interest on capital and depreciation. We'll add this and we'll add to the total of profit and loss account. Now depreciation is given in the adjustment also now. This depreciation will be taken as less expenses not charged to profit and loss account 30,000. And non-business income, here we have only, just look at your discount, which is related to the business. Commission is also related to the business. Bad debts recovered. Actually, if they have not mentioned anything over here. For example, in the note, if he has given or in adjustment that bad debts recovered were disallowed earlier, if it is mentioned in that way, then we would have taken as non-business income, but they did not mention, so it's a business income only. Rent received, our business is not giving any rents and taking collecting. If rent received is an income from house property, it is not an income from business. So we deduct those things. And whatever the income we get, that is called actual profit. On this, they have to pay the tax. And if you can just look at, they shown it as 3,56,000, but actual profit is 3,43,000. This is how we calculate the income from business. Now, in the chapter when we were starting, you might have seen income, business, profits and gains from business and profession. Profession means lawyers, doctors, chartered accountants, the who are in professional career, they also have to pay the tax. So when they pay the tax, they have the form how to calculate the tax whenever you are an income from profession. So if you take the example of a doctor, take the example of a doctor, and doctor and professional format is very easy. Receipts and payments. Professional receipts and professional payments. For a doctor, professional receipts are nothing but fees from the patients. Yes. And doctors, they will do even visit different hospitals. If they are specialists, like you take the example of anesthetician, he move to the hospitals depending on his requirement. So when they go, that is called visiting fees, or they'll get the consultancy fees. And if they are a special surgeon or anything, they'll get some operation fees, they'll get it. And if they have, even if the doctor is having some clinic of his own, yes, so whatever there he get that fee he will collect. And when doctor is moving from one hospital to other hospital, that is called traveling expenses. And I think you all know very well in 2020 what happened. Yes, we all went to some different scenario, and for that doctors also should get have to update their knowledge. They can't tell that no, we cannot find about anything about this disease or some virus, then who is going to treat us? So the even the doctors, they have to update their knowledge. How do they update their knowledge? By reading the books, doing research, attending conferences, which are where they will have a discussions about the uh, new contemporary issues in the medical field. So like this, for this, they have to, the incomes are for a doctor, visiting fees, operation fees, consultancy fees. Yes. And for doctors, even they have to study to become a doctor. Then who is going to teach them? Everyone cannot teach the doctors. So doctors only will teach the doctors. So what happened? They even get the teaching or teaching fee or remuneration. They only conduct the exams. Yes, so that is also remuneration they receive, like correcting the papers or any additional work they do apart from their actual work, which is related to their profession only. So this all comes under the income. Now, what will be his expenses or what will be his payments? As I said, to update knowledge, they have to purchase books, magazines, and they have to move from one hospital to the other hospital, traveling expenses. If they have car, depreciation on car or motor car. If he's having some hospital on that, if he is having ambulance, on that also depreciation. And if he's having own clinic, rent of that clinic he has to pay. And sometimes if you find small clinics or dispensaries, even there the doctors will give medicines to the patients, so he will purchase that medicine, for that also he incurs expenditure. So like this, here we will find what are his receipts and what are his payments. So just look, let's look at that. Yeah, so this is actually income from profession. There we have professional receipts and incomes and professional payments or expenses. And apart from only doctors and lawyers, anyone who is practicing independent, not working under anyone. See, here also all doctors will not practice. Few will practice and few will work under some hospital. When you work under someone, you will receive salary. Then you, whatever income you receive when you are working under them, then it will become income from salary. It is not an income from profession. If you are practicing separately outside, you have own practice, then only this will be called as income from profession. Like even you have beauticians, musicians, magicians, artists, they all have, if they have their own practice, they are not working under anyone, then it is will be income from profession. So all receipts minus payments will get professional income. Now, whenever we talk chartered accountant, what will be his receipts? Audit fees, yes, and any gifts from the clients if he has done very well. And what will be his payments? Office, if he's, because when chartered accountant he needs some employees or some assistants, for them he has to pay salary, he will have a office, so he will have some rent, computer, on that he will have depreciation, electricity charges. And even the chartered accountant also has to update his knowledge to accustom with the changes in the laws, rules. So you can just look at your audit fees, financial consultancy, even chartered accountants also will write exams, and for them also someone will teach. So examiner's fee, gifts from clients, fees for accountancy works. So these all are receipts, professional receipts. And what will be professional payments? We just look at here. Professional payments are nothing but office expenses, printing, stationery, books and journals, depreciation on office equipment, salary to staff, traveling expenses, membership subscription, postage and telegram, stipend to trainees. If you means under chartered accounting, there will be assistants who will be working. Yes. So for them, we will pay this stipend to them. Next, we have any other expenditure. So this all will fall under the payments. So it's very clear that, and it's very easy also when you are working under professional income from profession, nothing but receipts minus payments. Now, next, medical practitioner, if he's a doctor and is working, is having own clinic, is not working under anyone, then his professional receipts will be consultancy fees, visiting fees, operation fees, sale of medicines, examiner fees, gifts from patients, other professional receipts. These all are receipts. And payments will be again dispensary expense. Means if he is having some clinic, all the expenses, staff salaries, traveling, depreciation equipments. If he's having any operation theater also, that he will have to equip with all the equipments. Yes, on that we will provide, on assets we provide only depreciation. Books and journals, cost of medicines, printing and stationery, expenditure to increase professional knowledge, other expenditure relating to the profession. Next, we have advocate or legal practitioner or lawyer. So his income will be practicing fees or legal fees, consultancy fees, special commission fees, examiner's fee, gifts from clients. And these all will be his expenses, office expenses, salaries, depreciation on office equipment, books and journals, court paper and stamp, traveling. So like this, it's income from profession. Let's say one problem which is related to income from profession. Yeah. Just look at here. Dr. Satish, a medical practitioner, gives you the receipts and payments account for the year ended 31st March 2019. So this is the question they given as receipts and payments account they have given. Opening balance, consultancy fees. These all are receipts. Interest, dividends, rent, gifts from patients, examiner fee, operation fees, royalty on medical books, visiting fees, lecture fees, sale of medicines. And payments, dispenser expenses, staff salaries, books and journals, donations, income tax, surgical equipment, medicines purchased, shares purchased, traveling, municipal taxes of let out house, subscription to medical council, telephone charges, other balance carried on, other information. Allowable depreciation including on surgical equipment is 18,000. So depreciation given. Gifts include, normally what is given, gifts from patients he has given. So whenever any gifts from patient, that is the income to us. It's a receipt to us. But what is telling, gifts include 12,000 received from his father. So this 20,000 is not gifts from patients. In the 12,000 is person. So here also in professional income also you should be able to find out whether that particular expenditure or income that whatever given to us in the question, is it a professional receipts or a personal receipt? If you look at here, normally we, if we do not read this point, We will understand this total is a receipt to us. 20,000 is a professional receipt. But is it so? No. Why? Because 12,000 is received from his father, which is a personal thing. So here gifts from patients is only rupees 8,000 only. It's not 20,000. Next, if you look at your traveling expenses, what he has given traveling means it's a business professional payment. Why? Because as a doctor, I will be moving from one place to other for a doctor consultancy or some other else which are related to the my profession. But what is telling here, just look at your traveling expenses include 8,000 incurred on his pilgrimage trip to Tirupati. So he went to his pilgrimage, which is of his own personal interest. So this total traveling expenses of 20,000 is not a professional rate payment. Only 12,000 is professional payment. Why? Because 8,000 is his personal expenditure. Next, here even he mentioned, yes, staff salaries 40,000. But look at it, what is telling. Salaries paid included an amount of 10,000 paid to his domestic servant. Without reading this, we thought, okay, it is a professional payment only. But in that, that total 40,000 is not a professional payment. In that 10,000 which he paid to his servant at his house at home is included. Now we will remove it. So staff salaries will be only 30,000 only. Now look at the medicines. He purchased medicines. Yeah. Medicines purchased 28,000. He purchased medicines 28,000. But look at here what is telling. Closing stock of medicines is 18,000. So did he use total medicines? No, because 18,000 is left over. 18,000 is left over. So medicines purchased is not 20,000. Why? Because remaining some medicines are left over with us. That also we have to find out. Yes. So now what we will do, we will draw a format in which we will write professional receipts and professional payments. And remember, whenever we are doing in any income from salary or income from house property or any income from business and profession, income from profession or just give me a second. Yes. So what we will do, from professional receipts, whenever you do any problem, you have to write an heading. This is mandatory. You have to write like this. Computation, not like this. You have to write. I'll just show you. Whenever you start any problem, you, heading is must. Computation of income from profession. Name was given as Satish of Satish for the assessment year 2023-24. This is the heading you have to write before you start in the problem. Computation of income from profession of Satish for the assessment year 23-24. Then we draw the format under which you write particulars amount in rupees, two amount columns. Under that you write professional receipts. Even business also, just whatever we discussed, there also you write computation of income from business of. If any person name is given, then we write of person, that name. If any no name is given, there is no name in that particular problem, then we write in computation of income from business for the assessment year 2023-24. That's it. Under that, we write professional receipts and space professional payments. Now, whatever receipts are there, we write under here receipts one by one, and whatever payments, we write under payments. For example, receipts, we were having gifts from patients. Patients has given gifts, but 20,000 they given. But do this 20,000 belongs to the professional receipts? No. Why? Because in that 12,000 were given by his father. So what I will do, I will deduct that father amount. So what are the gifts from patients? Gift from patient is only rupees 8,000. I'll write in the amount column under professional receipts 8,000 only. Now, and even we were having what else? We were just let me look at that. Yeah, examiner fees there. Examiner fee 40,000. All right. Examiner fee 40,000. Even we were having operation fee also. All right. Operation fee. And the amount is 30,000. So like this, we write all the receipts and even we write all the payments. The difference is nothing but income from profession. But we should be able to find out whether it is a professional receipts or not, whether it is a professional payment or not. We should be able to segregate the difference of professional and personal. So let's look at that. Consultation fees, gifts from patients, 8,000, examiner fee, operation fee, visiting fee, sale of medicines. And if you just look at here, we have not taken interest, we have not taken dividend, we have not taken rent, we have not taken royalty on medical books. Why? Because what is his profession? His profession is a doctor, medical practitioner. Doctor work is not receiving any interest, not investing shares, not receiving rent. These are not business, not his professional receipts. Next, professional payments. If you look at here, dispensary expenses, staff salaries, books and journals, traveling, medicines purchased, telephone charges, subscription. See, this subscription to medical council, it's their membership where they have to mandatorily take that. Then it is a professional payment. Next, telephone. See, medicine purchased. Just look at here. Medicines he purchased is 28,000. But what is his closing stock? 18,000. Means actually how much when I purchased 28,000 medicines. But did I use total 28,000 medicines? No. When I was doing my professional income, I could found that there is a closing stock of 18,000. Means 18,000 worth of medicines are left over. Means how much I used? It is only 10,000. So medicines purchased will be only 10,000 only. Yes. Is 10,000 only. Next, telephone charges, subscriptions and depreciation. And the difference is professional income. This is about income from profession. Next, we move to the income from capital gains. Income from capital gains. So this is the fourth source of income where we receive the income and it is source of income and it is taxable. Under five sources of income, this is the fourth source of income. So here, whenever we are calculating the capital gains, income from capital gains, first we should know under again in this capital gain, we have short-term capital gain and long-term capital gain. Uh, if you are holding any asset, you are holding any asset in case of shares, okay? I'm talking about shares and securities. If you are holding any shares or securities more than 12 months or 1 year, they will become long-term capital gain. Now, when you are holding any asset, apart from shares, I'm talking, more than 36 months means 3 years, it will become long term. Otherwise, it will become a short term capital gain. For example, I purchased a house. I purchased a house And the house I sold within a period of 2 years. Then whatever gain I'll get out of that selling that house property, it will become a short term capital gain. It will become a short term capital gain. Now I purchased a house and I sold it after 5 years. Means more than 36 months, more than 3 years. Then it will become a long term capital gain. But in case of shares, it's not like that. If you are holding any shares or equity for more than 12 months, it will become a long term capital gain. Like only in the case of shares, it will become long term capital. Now, here long term capital gain mostly will come under any residential property if you are selling, any house if you are selling, or any agriculture, any land if you are any plot, any jewelry, gold or diamonds if you are selling, and whatever profit you get on that, it is taxable. Whatever profit you get on that, it is taxable because they have only appreciation. There will be no depreciation in that. It will be only appreciation in that. And whenever, how do we calculate that income from capital gain? We ascertain the income from capital gain by certain format we have, that is called, before going to that you should know some points, that is cost of acquisition and cost of indexation, cost of improvement. You should know what is indexation. So before, just look at that. If it is there in the new textbook, it's fine with you. No, here they did not give in the format to you. They directly given the problems to calculate. So in this,
I'm audible?
Yes, ma'am.
Yeah. There was some technical glitch at my laptop. So again, I logged in with some other device. Just give me 2 seconds of time.
Okay.
So here, income from capital gains. There is a format where how we calculate actually when it's an income from capital gain. And at most thing under income from capital gain, the most important point is the deductions which are allowed and which plays a crucial role in finding the income from or while doing the income from capital gains. I'll just share the screen. Yeah. So in income from capital gain, there is a format at how we calculate the income from capital gain. So I think here they have not given the format; they directly given the problems to calculate. Or let me check whether they're given or not. No, it's not given for here in the textbook. Maybe with you, the textbook which you may have, it may be having that. So what I do, I just stop the screen share and I'll try to write and show possible here. Yeah. So if you can just look at here, whatever means, for example, if I'm selling my house, yes, after selling house, I will receive some amount, and that amount is called as transfer consideration. What we call transfer consideration, or even it is also called as sales consideration. Transfer consideration or sales consideration. Consideration means, if you remembered in the below, yes, essential elements of a contract means receiving anything in the form of cash or kind is called consideration. So whenever I am selling some house or some property, whatever amount I receive, it is called as sales consideration or transfer consideration. From this, we deduct to sell that I cannot directly go and sell my house. So I have to go to some broker or some middleman who will, or to sell my house, I will incur certain expenses, and that expense are called transfer expenses. Transfer expenses, or they are also called as selling expenses. Transfer expenses or selling expenses. So I might have received some 10 lakhs as whenever I sold my house, it is 10 lakhs. Suppose. And I incurred expenses 1000. I'll deduct from this. I incurred expenses some 10,000. So whatever difference I get, that is called net sales consideration. Net sales consideration. So first I'll write whatever income I receive by selling my property, and from that I will deduct sales or transfer expenses or selling expenses. And the difference we call it as net sales consideration. And what happens, for example, my grandfather has given one house to my father. My father has given that house to me. Now the house will remain as it is, how my grandfather has constructed. No, it will become old building. If it is more than 50 or 100 years, it will be almost a demolishing stage. So I cannot be with the same house. What we will do, we will renovate it, or sometimes we rebuild it. So if my father has already rebuilt it and given me, and there was some small repairs, some gate problem, some wall problem, or whatever, like, and even I have added one more floor or an additional room to that building or additional room to that house. That is called as cost of improvement. We call it as cost of improvement. Means what I'm doing, I'm adding extra to that house, to that property, is called cost of improvement. Now, apart from this, even we have cost of acquisition. What we call cost of acquisition means at what price the house was purchased. For example, my great grandfather has purchased for 1 lakh that house. Now that house, same house value will be some 10 crores also. 10 crores around like that. So in that case, what, for example, if I sell that same house now in the market, I'll get 10 crores. Is it justified to pay tax on 10 crores? Why? Because my, and if I directly deduct from this is net sales consideration, and from this I have to deduct cost of acquisition less cost of acquisition. What was the cost when my grandfather purchased? It is only 1 lakh. It is only 1 lakh. And when my wife, when I added room to that house, cost of improvement, maybe around 95 or 2000 or 2005, I added that room. For that, it may be 10 lakhs. If we deduct from 10 crores, it's very unjustified to pay on my behalf to pay tax to the income tax department. To make it or to bring the cost of acquisition, if the same house which I'm selling now is purchased now, what will be its cost? So that is called indexation. We do the indexation. Means we try to bring it, what was the value 1 lakh when it was purchased. Some around 1980s or 1990s, some around that period. But now in 2024, what will be the same house rate? The house value will be there. To bring this 1 lakh to the present year, it is somewhere around 95 in the period of 1995. The same house, if it is purchased now, what means bringing the value to the current period with using the index values is called indexation. So what we will do when we are calculating the income from capital gain, first we write sales consideration, means at the rate the house is selling now. Now I am selling that house, sale value or sale price. From this I will deduct selling expenses or transfer expenses. And whatever the difference I'll get, I'll call it as net sales consideration. Net sales consideration. And from this, I will deduct indexed cost of improvement, indexed cost of acquisition, and indexed cost of improvement. These two will be deducted. Indexed cost of acquisition and indexed cost of improvement. When you deduct this, that is called, the difference you'll get it, that is called income from capital gain. Then how we will do this indexation? Indexation is very, very important. So let's look at the indexation point. For example, we'll discuss about one example. We'll go with the one example. That is, like, we'll take one plot. There is a plot. So there is a plot. And plot sale prices. Plot sale prices 20 lakhs 24,000. Plot sale price is 20 lakhs 24,000. Now, this plot sale expenses are, selling expenses are 24,000. And cost of acquisition is 7 lakhs. Means when this plot was purchased, it is 7 lakhs only. And the year when I purchased is 2004 and 5. 2004 and 5. And CII, we call it as cost of inflation index, because this house was purchased in 2004 and 5, and the now year is 2024. So I have to bring this rate to the present year. So I will use the index number, that is cost of inflation index. So cost of inflation index in 2004 and 5 is 113 in the year 2004 and 5. Now CII, that is cost of inflation index in 2022-23 is 331. Why 2023 I have taken? This is our previous year, the year in which we are selling our house. And our assessment year is 2023-24, the year in which we are paying the tax. Okay, so this is the question. What is that? Plot selling value is 20 lakhs 24,000. Selling expenses is 24,000. And this plot which I am selling now, whose value is 20 lakhs 24,000, when I purchased in 2004 and 5, it is 7 lakhs only. It is only 7 lakhs. And index cost of inflation index in 2004 and 5 is 113. And cost of inflation index in 2023 and 22 and 23 is 331. Okay. Now, we have to find out what is the income from capital gain. So let's do. I remember all those points so that it will be easy for us to do the problem. So what I'll do, our format is sales consideration. First we write it. So here it is sales consideration. Sales consideration. That is 20 lakhs 24,000. From this we will deduct selling expenses. That is 24,000. 24,000. When you deduct 20 lakhs, 24,000 minus 24,000, you will get 20 lakhs. And this is called net sales consideration. This is called net sales consideration. Net sales consideration. Now from this, we will deduct cost of that is cost of acquisition. Acquisition means when I purchase that house. Okay. So what I do, I did just remove this. Now I'll write less. So when I purchased in 2004 and 5. So when it is more than 36,000, 36 months is a long-term asset. Yes, because I purchased in 2004 and 5. Now it is 2024. It's more than 36 months. So we'll go for indexed cost of acquisition. Indexation we go. So I write here less indexed cost of acquisition. So I know what is the cost of acquisition. I purchased this plot for 7 lakhs. I purchased this house plot for 7 lakhs. So I'll write cost of acquisition 7 lakhs. Formula. Cost of acquisition is 7 lakhs. Seven lakhs Cost of acquisition 7 lakhs divided by the say sorry cost of acquisition into cost of acquisition into index value of this sale year. In which year I am selling? I am selling in the 2022-23. So the index value of 2022-23 is 331 divided by the year of acquisition, index value of year of acquisition. When in which year I purchased? I purchased in 2024 and 25. Sorry, 2004 and 5. In 2004 and 5, index value is 113. 113. So 7 lakhs into 331 divided by 113. It comes to 20 lakhs 50,442. 20 lakhs 50,442. Now tell me, did I receive profit or loss on the sale of long-term capital asset? Whatever I sold, the asset I received is 20 lakhs. But when I did cost of acquisition, I got a loss. 50,442 is the loss I got. I did not receive any capital gain by selling my property. Instead, I received a loss because my income is 20 lakhs. But when my house was purchased, because indexation helps us. So if the same house, if I go for purchase, it will be 20 lakhs 50,442. So in that case, I did not earn any capital gain. Instead, I had loss on sale of capital asset. This is how we do the indexation. This is when any problem you take. Cost only for long-term capital assets. This is indexation is done only for the long-term capital assets. And how do we define long-term capital assets? We define long-term capital assets, any assets holding for more than 36 months, we call it as long-term capital asset. But in case of shares, it is only 12 months. So plot is not a share. So it is more than 36 months. And in this question, there was no improvement. If improvement was also there, that also will do it. Okay. Now, this is how we do that. I'll share the textbook part, how actually it is. Yeah, just look at here. This is the old book. So they given all old years. So index values also will be different. Don't worry about index value. There is a table. You just remember the previous year index value. That's more than enough. Previous year is 3331. So here it is till 1819 only. So don't consider all these things. The index number changes every year. See, this is how just now we did indexed cost of acquisition. Cost into means cost of that plot into cost inflation index for the year in which the asset is sold. So cost was 7 lakhs. 7 lakhs into cost inflation index, the asset is sold is 331. The year in which we sold, and cost inflation index for the first year in which the asset was held. The asset was held in 2004 and 5 and it was 113. This was the form. This is the formula how we calculate the cost of indexation. Even if we just look at your cost of improvement, indexed cost of improvement, that is also been calculated. Cost of improvement means whatever the expenditure we incurred on that improvement. For example, for additional room, I incurred some 5 lakhs. So here 5 lakhs. And in which year the asset is sold, it will be only 1 year. That is 331. That is in 2022 and 23. And in which year that improvement took place. Maybe I purchased the house in 2004 and 5. I did improvement in 2010, suppose. So I have to write 2009 and 10 index value. And apart from that, we have certain exemptions. which, for example, just now we sold one plot, and after that plot, for example, instead of loss, we got some profit. And whatever profit after receiving that, if you are reinvesting, if you are reinvesting in the purchase of same asset or some other assets, will get an exemption. Exemptions under section 54, we call it as exemptions under section 54. Means after selling that particular asset, whatever gain you are receiving, again you are reinvesting, then you will get an exemption. So we have 8 exemptions. They are section 50, that is under section 54. The first one is under section 54. So instead of sharing this, wait, I'll share the white smarts. So here we have exemptions. So after gaining, just now we got some loss. Instead of, for example, suppose instead of loss, if it is a gain, we got some 2 lakhs of income from capital gain. Now the 2 lakh capital gain is there. So do I get any exemption or not? Let's see. First one, under section 54. Capital gain raising on sale of residential house. Means it was not plot, it was a house, residential house, where the people live. Instead of giving for commercial complex or some rent or some business, if that building or that residential house is we received an income from that residential house, and that income you are again reinvesting in the purchase of the residential house or purchasing of any property or constructing of any house. In that case, will receive an exemption under section 54. When any residential house sold and from that capital gain received, that capital gain is again reinvested in the purchase of again same residential, means same type of for residential house property only. If you are purchasing or constructing, in that case will receive an exemption under section 54. How much will receive? Whatever the amount you are investing or total amount whatever you have invested. Out of that two, for example, I received an income of 2 lakhs. I purchased an house of 25 lakhs. So how much exemption I receive? I will receive only 2 lakhs only. Because my profit is only 2 lakhs. How can I claim 25 lakhs? I cannot claim now. So I'll receive a exemption of then in that case there is no tax liability. Zero it will become. See, I got capital gain in the previous problem just now we did. I received a capital gain of 2 lakhs. Income from capital gain is 2 lakhs. What I am doing this amount, again I am reinvesting in purchasing of new house. And new house value is 25 lakhs. I cannot claim 25 lakhs because my gain is how much? 2 lakhs. So I'll get a deduction on a exemption under section 54 of 2 lakhs. And there will be no tax liability, and there is no income again on which tax is calculated. It will become zero. Now, next, second one. Under section 54B. Under section 54B. So, this is given when capital gain arising on sale of agricultural land. Means by selling agricultural land, whatever gain I am receiving, yes, and that amount again I am purchasing another agricultural land. But when within a period of 2 years from the sale of that land, for example, I am selling in the year of 2024 and 25 financial year, I should sell within a should again purchase or again reinvest in the same agricultural land within a period of 2 years from the sale of my land. Means within period of 25, 26 and 26, 27 ending, I have to repurchase it. Then I'll get this exemption. So 54 is normally is residential house property. 54B is agricultural land. And agricultural land, what he has to do? He has to again purchase agricultural land within a period. Then only this exemption is applicable. Otherwise, it is fully taxable. Next one, 54D, under section 54D. This is compulsory acquisition of capital asset. Means, for example, if you see where, yeah, in Koti, that Badi Chodi or Sultan Bazar area, there is a metro going from that place. Yes, metro rail is going. Earlier, there was a market where everyone used to do their business. But metro rail is a government activity. So the government has every right to acquire that land, to take that. Compulsorily, they have to give out. Whether we accept it or not, when government asks, we have to give it. So when government asks, they'll not take free of cost, they'll pay some compensation to the persons. So whatever, after compulsory acquisition, whatever amount paid by that particular, to that people, then it is exempted. Means I'm not selling out of my own will. What I'm doing, some other or the government is taking from me. So in that case, compulsory acquisition, in that case, whatever compensation I receive, I'll get an exemption. But where, why it will get exemption? Only when that amount which I received from compulsory acquisition, I'm again, for what purpose they given? Because they taken away my house or my land or my building. So again, if I purchase some land on building, then only it is, or for that activity only, for what purpose? For example, your shop was demolished. So you should again purchase your shop only. You have to again invest in the business or some that industry only. Then only you'll get an exemption. Then only you'll get an exemption. Means the widening of road will be done. So some shops will go off. So in that case, whatever compensation they receive, they have to again invest in the same, they have to start the same business, they have to purchase the same activity, then only it is exemption. Next, they have 54 EC. 54 EC, sale of long-term capital asset. Either it may be building or land, and purchasing the specified bonds. After selling your building or land and purchasing the specified bonds, you are investing in the bonds, then only this exemption is available. Next, section 54F. Sale of any long-term capital asset and purchase of residential. Means you are selling any long-term capital asset and whatever income, means other than residential house, not your house, any property or any where you are not staying, you are selling and purchasing. After selling that amount, whatever amount you are receiving, you are purchasing the house, then you will get an exemption. So like this, we have 8 exemptions under which capital gains, income from capital gain can be calculated. Okay. And the remaining we continue in the next class.
Okay, ma'am. Thank you so much.
Thank you.
Thank you, ma'am. Thank you.
Thank you.